Welcome to the Banyan Edge Podcast. Here's your host, Charles Sizemore.
Welcome. I'm your host, Charles Sizemore, and today we are continuing our conversation on artificial intelligence, AI. Now, if you're like myself, a child of the 80s and 90s, you might associate AI with a certain robot that looks a lot like an Austrian bodybuilder we all know, coming back in time and trying to kill us all. If you're less dystopian, the more optimistic sort, you may think of AI and look at recent developments such as ChatGPT. Generally, you're going to think of office work. You're going to think of technology. You're going to think of AI being this new tech frontier. But really the beauty of it, what makes AI exciting is not that, it's its ability to remake otherwise boring, kind of traditional, slow-moving segments of the economy. And my colleague Ian King really addressed this recently. He wrote a piece on how AI was revolutionizing agriculture, literally the way we eat. Well, today we're going to look at a different industry. And to help me with that, I brought on our data analyst and I would say future Jeopardy champion, Matt Clark.
I've never had a warmer welcome in my life. Thank you.
Future Jeopardy champion, because you are just a font of knowledge here.
More like useless knowledge, which would be more key for Jeopardy than anything else. So yeah, absolutely. It's, it is what it is. But yeah, AI, it's become, a pretty significant buzzword, and it's kind of taken the investing world by, I mean, buzzwords, but, however you want to phrase it. But it's kind of taken things by storm. I mean, it started with, obviously we had ChatGPT, and that kind of, blossoming out and all of the capabilities, it has, introduced us to that quite honestly have been around for longer than we think. It's just ChatGPT kind of commercialized it.
GPT just made it front and center where you couldn't ignore it.
Yeah, it did. It put it right in front of our face, but these were things that have been around for a while. These abilities have been there. It's just getting access to them has not been nearly as open as it is with using a ChatGPT. But AI is still very complex, and it's one of those things that we think it's just as simple as sitting down at a computer and typing out a question, and then AI kicks out an answer. And it is that simple in its base form, but it can be so much more. And, I always, you read all these things about how AI is going to start taking jobs, things like that. This is the same thing we heard with automation, factory automation, which is kind of, if you think about it and connect the dots, is kind of an earlier form of AI, but using robot programmers and PLC programmers and things like that to make these robots dance and do work on a factory floor. That was,
and it did kill jobs, by the way. It did destroy jobs, but then it created better jobs.
Exactly. And that's kind of the context we have to look at this, is that it's not necessarily that it's doing away with jobs. It's doing away with jobs that deal with the mundane, and is creating jobs that kind of force us to be more cerebral, if you will. Because just like with robots on an automation on a factory floor, AI does not work well without some form of human interaction. AI, yes, you can go and you can use Bard or you can use ChatGPT or whatever, type in a question and it'll give you an answer. But if you want it to be more robust, if you want to get more use out of AI, you have to train it. And there's a certain way to do that. It's all about prompts of how what you tell AI to do, how you tell AI to think, what kind of information and data you provide to the
patterns. AI. You train it by giving it patterns. Exactly.
It does. You can assign it a voice. You can assign it a data set to examine. You can train the AI to start doing specific tasks and to do specific things over a short term or a long term. And that's the one thing that I think.
And about that.
Yes.
You wrote a piece that I want to get to. And okay. you wrote about how, and this was in Money and Markets, you wrote a piece about how AI is revolutionizing the insurance industry. Now, insurance is old. Insurance, as we know it today, actually started in a London coffee shop, and I believe the 1600s, Lloyd's of London. Yes. So this is a very old, sleepy industry. There's always been inputs. And let's think about life insurance, for example. When you apply for life insurance, They look at your age, they look at your sex, they look at your profession, they look at, in some cases, your medical history. Are you a smoker? Are you a joker? Are you a midnight toker? Whatever. They go through and they ask questions, and then they assign probabilities of basically when you're going to die, right? And that's how they price out your policy. So insurance has always kind of been based on inputs like that. Now looking at more, and we're looking at a more sophisticated way to do this. So why don't you walk me through that?
Sure. And first, before I start, I do appreciate the Steve Miller reference in the video. I think that's awesome. Anytime you can drop that in, that is great. The one thing about the insurance industry is that, anyone who's dealt with insurance, whether it's property and casualty or life or anything like that, the one thing you will learn very quickly is it is extremely inefficient, meaning there are checks, double checks, balances, rebalances. In order to, determine what your risk is for, auto or property and casualty, life insurance, whatever, there are an inane amount of redundancies. So, you have an industry here that is extremely profitable. I mean, the insurance industry, the insurance sector of the market is extremely valuable.
Fun fact, Warren Buffett is a billionaire because of insurance. He's not a billionaire because he's a good stock. He is a good stock picker, of course, but he is a billionaire because of his successful use of insurance.
Berkshire Hathaway is one of the largest insurance underwriters in the world. Exactly. So, I mean, you don't. That's where the money's made for him. I mean, obviously, you're right. He picks stocks well. But to get back to it, so obviously you have an industry that is extremely inefficient. It takes months sometimes to process claims. It takes months to process policies, things like that. So what can be done here is that they can start utilizing artificial intelligence to start eliminating some of these redundancies, to start making things more efficient, and to really streamline the overall industry. Now, I'm not in insurance. I don't work in insurance. I've only dealt with insurance companies. So that is the extent of what I know. But everything from filing a claim, getting a resolution of that claim, whether that's a good resolution or bad resolution, accepting or appealing decisions, things like that. It takes a lot of time and a lot of back and forth.
Well, you also assume that because AI is based on essentially pattern recognition, identifying trends, identifying patterns, this would be instrumental in finding insurance fraud. So if you train the AI to look for certain flags for insurance fraud, it's going to be wildly effective, more effective than any human in detecting fraud. Did you set your house on fire to collect the check? Did you lie on your application for health insurance? It'll be better. It'll be vastly better at detecting things like that.
Yeah, I mean, let's not be mistaken. AI is not going to be the finger pointer when it comes to things like identifying fraud. AI is going to be able to point out inconsistencies in information that stand out, and then you're still going to have that human element that says, "Okay, I see that. I either dig deeper or I identify that as being potential fraud." So let's not be confused.
Until they create AI RoboCop, who will then investigate in person.
You're going to lean on Skynet and the Detroit Police Department RoboCop this entire episode, aren't you?
I really am. I appear to be missing the 1980s, but anyway,
it's fine. They'll run a Terminator marathon for you on some channel, and you'll be able to kind of catch up. But yeah. So again, the overall fear of AI is going to take over, robots are going to take our job. No, that's not the case at all. First off, it's going to create better jobs, more interactive jobs, and ones that require a different skill set, but that
it will help us do our existing jobs better.
Absolutely. And insurance is the same thing. And so, there is a kind of an unknown, I don't want to say, sector of the insurance industry, but there is, insurance companies continue to work on using technology to improve their overall efficiencies. And, there's actually an effort that it's called insurance distribution. And what this does is it focuses on the overall insurance model, all the way from opening communications with claims, to automating processes and claims, things like that. It's kind of a start to finish type of a look at the insurance industry, and then trying to utilize technology to make it better, or to make it more efficient, to make it more reliable. And this particular sector of the market in the US has seen strong growth since about 2017. From 2017, the distribution market for insurance was valued at just about $135.8 billion. By 2026, that market is going to be valued at about $261.6 billion. So right around a 36% jump, or I'm the 36% jump from 2022 last year, where it was about 195 billion to 261.6 billion. So, but going all the way back, it has seen a steady stream of growth in the sector, meaning that there is more interest in this. There are more companies becoming involved, and they are developing better products to do so. So, you know, they don't really, but these projections that I see and that I shared in the article don't necessarily incorporate what AI brings to the table, because you know, these projections were done last year before kind of AI took hold. So there is a company in particular that I highlight in the piece that does provide software solutions to the insurance industry, and it is incorporating AI into that software. The company is called Sapiens International Corporation, trades on the Nasdaq. The ticker symbol is SPNS. So Sam Paul NS. I forgot my phonetic alphabet there for a second. I bounce between one or the other, and it's when I talk to Mike Carr, I use the military alphabet. When I talk to everyone else, I use something else, so it just gets confusing for me. But anyway, so it's an Israeli company, like I said, and it has recently announced a partnership with Microsoft that's going to integrate AI into its software. So, you know, Microsoft has come out, has utilized ChatGPT.
Yeah, they were one of the early backers of ChatGPT.
They were.
They integrated it into Bing, you know, their competitor to Google, et cetera.
Correct. And they invested, you know, billions of dollars into this technology. And now they have taken that investment and turned it into an asset to themselves to use for Bing and the like. So what Sapiens is doing is they're using that technology from Microsoft along with the Microsoft Azure product suite to build out a suite of insurance-related technology that can lean heavy into AI to help with this efficiency process. It's one of the first companies that I could find that has kind of taken on this responsibility of insurance distribution and increasing efficiency using technology. And since that announcement was made a couple of months ago, the stock has actually been up about 20% based on a lot on that partnership. And it's only continue to go up. And so utilizing that piece of news and information, I then kind of cross-referenced our green zone power rating system that you can use on moneyandmarkets.com.
That was going to be my next question. So you guys take you and Adam Odell take a very quantitative approach to the stock selection process. And you're that green zone rating system, that stock power rating system is what you use that's what you use to pick apart a stock.
Absolutely. Yeah. I mean, but basically the rating system, if you're not familiar with it, it looks at 6 different factors: 3 fundamental and 3 price-based. Price-based, on the price-based side, you have momentum, you have size, which would be market cap, and volatility. And then on the fundamental side, you have the value of the stock, which includes like its P ratios, PS ratio, PCV, PBV. And then you have quality, which would be its return on margins, and its growth, which would be like sales and EPS growth. Now, there's much more that goes into it than that, but on the surface, that's kind of the overarching look at it. And takes those 6 factors, provides ratings on each one of those factors based on all the different metrics, and then it assigns an overall score. And what we look for is, it's easy to identify a trend. It's easy to identify a high rising stock in the market or a low falling stock in the market. The question is how do you confirm that? And I spend every day in Mike Carr's trade room, which if you haven't been a part of that, I definitely encourage you to do so. But a lot of it we talk about is confirmation, and not necessarily confirmation bias, but confirming what we see. You always want to have something that backs up what you see on a chart or in a news article.
It's not just anecdotal.
Exactly. So I'll look for a trend And then what I'll do is then I'll do a deeper dive. And once I pinpoint, 2-3 companies within this trend that have the potential to capitalize on the trend, I then turn to the Green Zone Power Rating System to tell, what does it tell me? What does it tell me about the fundamentals of the company? What does it tell me about the price metrics of the stock itself? And from there, you can usually whittle down a list of 3, 5, 10 down to 2 or 3 really strong investments, or investments that you should probably stay away from. So,
and so let me ask. So I know that anything that rates a 60 or higher in the composite score is considered bullish. Mm-hmm. Anything that rates 80 or higher is considered strong bullish, mm-hmm. based on Adam's historical work, mm-hmm. et cetera. You found that stocks that rate strong bullish tend to outperform the market by a factor of about 3 to 1. Correct. So how does this stock rate?
Overall, when I wrote the piece, the stock rated an 89, which would make it a strong bullish stock for us. And our anticipation, our expectation based on that and on the numbers that we see is that this stock would outperform the market by at least 3 times over the next 12 months. It rates very high on growth. It's had a very good growth trajectory in terms of its sales and its EPS. Quarterly revenue in this last quarter was up 6% over the prior year. Gross profit was up 7.5% from the same quarter a year ago. 100 basis point increase in operating margin. 14.2% jump in operating income.
For the layman out there that doesn't know what that means, it means the company is getting more profitable as they go.
It's making more money.
Or not just making more money, but making higher percentages. Like their profit margin's getting better.
You gotta let me finish, Charles. I was going to jump right into that. But yes.
Hey, this is my show. I'll interrupt you if I want.
I know. But yeah, when you look at margins, that's exactly what we're talking about. We're talking about not only how much money is the company bringing in, but how much of that is pure profit. So when you see numbers like gross profit, operating margin increases, things like that, that's exactly what it means, is that this company is making more money, but it's also spending less and making more profit. And that's what you like to see. That's a fundamental that as an investor that you want to see a company that is improving its balance sheet, and Sapiens is doing that, and to a good degree. Now, since those quarterly numbers came out, the stock has started to climb, have a nice climb, as I said, up about 20 or so percent since its partnership with Microsoft, rather. Over the last year, it's up about 10%. Doesn't seem like a whole lot, but considering the sector that it's in and how badly beaten down tech has been in probably 9 of the last 12 months, that's actually not bad. And when you compare it with its peers, it's in the finance software sector of the market, and that particular sector down 6% over the last 12 months, whereas Sapiens is up almost 10%. So you see a pretty wide-ranging difference in terms of average stock price compared to Sapiens stock price. From the 52-week low of the stock in November of 22, the stock's up 50.3% to where it is as I wrote the article. I think it's gone even higher since then. So we see a lot of good momentum, and that's the other thing that we look for, that Adam and I really focus on, and that is looking for stocks that are already in a confirmed uptrend. It's very easy to say buy the dip. I don't prescribe to that simply because you never know where the dip stops. So
buying the dip can turn into attempting to catch a falling knife.
Exactly.
So this is one of the reasons why I really like your stock rating system, because you incorporate momentum with growth, value, et cetera. An ideal stock is going to rate fairly well on value, meaning it's not expensive, but also rate well on momentum, meaning it's a cheap stock that's trending higher. That's the ideal universe.
Right. And also, we will also want to look at that momentum because, like you said, it can turn into catching a falling knife. If you see a stock that's on a downward trajectory, you buy here, what's to say the stock doesn't continue to go down here? And even if you are in a buy and hold portfolio or something like that, you still have that much more to make up before you see a profit. Whereas if you see something that's already in a confirmed uptrend, then there's a much higher likelihood that stock is going to continue to rise.
The tide.
Exactly.
Exactly.
And so that's when I see a chart, like, and again, I don't want to confuse. I don't recommend stocks based on what a chart looks like. I think that's kind of silly, which is why the Green Zone rating system, the Green Zone Power rating system becomes even more valuable, because looking at a chart is great, but you really want to be able to do a little bit deeper dive than that before you decide to invest your money. So if you look at a stock, I could pull 50 charts today and they all look great. They all look great. They all look like buys. And I would bet that probably only 10 of them would be viable ones that you want to buy and have in your portfolio. The other 40 would be ones you probably want to stay away from. So, looking for that confirmed uptrend, that's what made this even more attractive, in addition to its strong score on the Green Zone power rating system. So the bottom line here is that, AI is everywhere. We see it everywhere. We know it's out there. It's only going to get bigger. Its commercial use is only going to expand. But I think where to find profit here is not to invest in ChatGPT or to invest in Microsoft or Amazon or Google. I'm not saying those are bad.
The last Johnny come lately to jump into those 5 huge tech stocks that are pulling the market higher right now. Exactly. What you want to do is you want to try to find those disruptors, those companies that are utilizing AI in an unknown or an unrealized way that has a potential to be extremely profitable. So we've identified a very profitable sector of the insurance market, and that is insurance distribution. We have a company that is now partnering with Microsoft to utilize AI in its suite of software to help insurance companies become more efficient. And the stock also rates very well on our Green Zone power rating system. So, and it's in a confirmed uptrend. So here we have all the makings of a stock that is very, very strong and has the potential to grow legs and really run over the course of the next 12 months, even longer. That's exactly what we like to see. So Matt, tell our viewers, where can they find more? Where can they check out your system? Where can they put in their own ticker symbols and play with this themselves?
Absolutely. Moneyandmarkets.com. So it's all spelled out, moneyandmarkets.com. Top right-hand corner, you're going to see a search bar. Click the search bar, type in the ticker, and you'll be able to see the rating system as it is right now. Scroll down a little further. There's some other information there. You see a stock chart that you can kind of manipulate. Financial information, description of the company, and any research that we published on that particular ticker is also underneath. So it's kind of a one-stop shop.
I will reiterate, you don't have to be a subscriber to do this. This is completely free. You just go to the website.
It is completely free. And you can actually set up your own watch list and track how stocks are performing on the power rating system over time, if you like. I mean, we're also building out a lot more capability with the rating system that includes different lists, different sectors. We've already we launched a product as part of Adam's Green Zone Fortunes package that you can actually get every stock that rates 40 and below in a list every week, and it's all right there. It's called the Blacklist, and it's all right there. You have to be a subscriber to Green Zone Fortunes. I think it's to have that. It's basically a list of stocks that you should either sell out of your portfolio now or stay away from it entirely.
That's good. No, it's risk management's the name of the game there. So that's fantastic. Well, all right, Matt, thanks for being on today. You've helped me unpack what is a very complex topic. Make it simple, make it relatable. The overarching theme here is AI is changing the world until it decides to kill us with assassin robots. This is going to be a force for good. I have to, sorry.
I know. I know you did. I know. You just can't help yourself, can you?
I just
can't help yourself.
But until, the beauty of AI, it's changing one sleepy industry after another. And as we discussed today, insurance is one of those right now undergoing this transformation by AI. So Matt, thanks again for joining us.
You bet. My pleasure.
And to our viewers out there, I do highly recommend you go to moneyandmarkets.com. They have a ton of tools that you can use absolutely for free. Just tinker around with it. I do it all the time. If I have a stock I'm starting to research, I find it a very useful place to start that process. And on that note, we will pick this up next time. Until then, go out and make yourself some money.